to Bade Ajidahun, who is joining me now in the studio to look at the impact of the FOMC minutes on all classes of assets today at the markets. Good morning, Bade. Thank you so much for being here. Now, we've seen the impact that the Federal Reserve, the minutes of its March meeting is having on markets, equities, currencies. Now, what is interesting is the fact that just a little over 2 weeks ago, we had very good numbers from the U.S. jobs market.
Sure.
And then, so many people, especially analysts and the markets, the optimism was obvious. We saw that being reflected in the numbers. But then the U.S. Federal Reserve Chairman, Mr. Ben Bernanke, comes out and says, well, the numbers are good, but I'm not so confident that the recovery being shown at the jobs market, is sustainable. And now we're here again 2 weeks later, and now he's saying, we might not, the jobs market may be doing very well and might be sustainable, and so we won't provide any more quantitative easing.
I think as at the time was giving out the speech on the shift that we're going to have a bearish market for the US dollars. He was just looking at the global economy, but from the votings on the table, and they looked at the historical data of what has been happening in all of this economy, it was showing us clearly that the American economy is gradually recovering. So yesterday I had no point then to, because it's not a one-man show. You have to vote, and you have to get your statistics from all of this sector of the economy, and the numbers coming out from those regions is showing that there is no need for quantitative easing. Look at the labor market. Unemployment rate is gradually reducing. If you look at the GDP for 3 months, that's a quarter,
that's
it has been improving.
The last quarter of 2011.
Yes, that has been improving tremendously. And if you look at coming down to the inflation rate, it has been subdued. So with all that, he has no choice than to shift his ground, because what further quantitative easing is going to do is that it's going to pump in more money into the economy, and if you are pumping in more money into the economy and you're not seeing a corresponding inflationary measures come into the economy, and it's not too good for the United States dollars.
I was thinking that perhaps from his own standpoint, he's thinking, because I know he's been at a place before where the economy takes 2 steps or 3 steps forward and 2 steps backward. This month we have positive consumer spending data, or the retail sales up, or the homes market, housing starts positive, and then the following month we're back at square one, 1 step forward, like that. So he's just like, we can't be having this mixed growth numbers. We need to have some sustainable.
It's a light showing at the tunnel. What you have been seeing now, at least in the past 3 months, it has been good news for the American economy. So it's not unusual for us to now get bad figures. But if you look at not just the American economy, if you look at every other economy surrounding America now, I think the American economy has been moving much more better than that. If you compare it closely to the Eurozone has been posting a lot of negative result in spite of the bailout and the money pumping into the Eurozone. So he has a right to his fears, but obviously we'll talk about an economy going by the data that has been released from all of this sector. So yesterday when the speech was out, the voting that took place before the speech obviously made him to shift his ground, because these were positive figures. These show that the American economy is gradually recovering and growing, so he has no choice than to shift his ground. So what, popular
demand, or you think that if he, within himself, believes that, no, we're not, the jobs market or the U.S. economy is not out of the woods yet, or because, popular opinion or the other members of the board...
It's voting, and all this voting comes from statistics.
He is the chairman, he's the ultimate. If anything goes wrong, the buck stops at his table.
Well,
he's going to take the heat.
He has to take responsibility for whatever he's saying. But obviously, he has to change his. He has to change. His opinion can override what is happening. His opinion can override the data. Yes, and economists from Reuters yesterday, when they were conducting a poll, said that was a major shift from the hawkish statement that he gave about the U.S. economy. So, should we be saying that he doesn't know what he's saying about the economy? But obviously, that has proved his statement wrong. Well, let us not use the word wrong. Let's just say that we had more light, and he had to shift his ground on what he believes about the economy of the country. Because since what FOMC statement considers generally, it looks into the key sectors in the economy, yes, and to show, to now make a recommendation or advice on whether to put in more stimulus into the economy or not, whether to keep interest rate low or not. So with all of this, it obviously showed to the committee in the FOMC meeting that, see, we in America, we don't need further quantitative easing.
Well, at least for now, because I'm saying that because I'm concerned about the fact that because on Friday we're going to have the non-farm payrolls data, very key. That will consider how much.
But going by what has been happening in recent times, job has been increasing. So though a lot of economists have been going in favor that we're going to have a positive non-farm payroll for the American economy.
Okay, let's look at the impact. Let's while we look through some of the highlights of the FOMC, let's also look at some of the major impacts it's been having on especially equities this morning.
If you start with the dollar index, yesterday the news was released around 7:30 Nigerian time. Now what we saw was that the dollar index rose above all major currency pair. Coming down to a currency pair like Euro USD, the news was favorable for the dollar, and obviously the Euro was having weak data. So what you saw within the space of about, for us in currency markets, within the space of about 30 minutes, we saw Euro drop over 100 points, bringing it very low yesterday, and into the early hours of this morning, we still saw the Euro dropping.
So is this a classic example of investors suddenly being taken unawares and just taking shelter in the dollar, which is obviously known as
what investors are going to do is just shift to the dollars. They buy the dollars. So because the dollar has a strong positive news,
even though it's the currency of the country, that's causing the concern or the anxiety at the market.
It's at that market, at that particular point in time, investors will be throwing their money at dollars. So we saw people pulling out from
the equities,
from the metals. What we saw, gold dropped yesterday, silver dropped, and bullion dropped.
Yeah, they're all still down this morning.
And they're still down because going by the expectation for today on ECB and what is likely going to happen, the favor is still that the dollar is still strengthening. And so what happens is this: if the dollar is strengthening, then people see no reason putting their money in the metal. So you begin to see gold drop, silver is dropping, crude oil also is dropping, while the dollar index is rising because
so it's just
the dollar is strengthening. So the idea is you are going for the stronger currency. So
the flight, I think it's more of an issue of flight to safety as it
were.
Sure,
flight to safety, and it's not just safety, and you are still coming out with
gains also. At least for currencies traders. Let's talk about the ECB, the European Central Bank meeting for today. Now the numbers coming out of the Eurozone in terms of manufacturing as output from the manufacturing, the industries, and the general producers market managers index for the month of February. I think it came down to 48.7. Now we do know that any reading below 50 usually signifies contraction.
Yes.
So with all the stimulus measures, with all the money being pumped into the banks and all into the economy, none of that is.
I think it's quite unfortunate that what a whole lot of the analysts didn't see that it was that the mess that the Greece economy or the Eurozone has gotten to is not something that would quickly recover. I remember one of our presentations said that it took Greece. Greece issue didn't start 2 years ago. It didn't start 3 years ago. Greece has been in deep mess. And what is happening now in Greece is now spreading to other parts of the European country. You have Spain. Spain is now the bond yield for Spain is bearish, it's been downward, and Portugal too is almost contacting all of this. Now what you are seeing now is that these figures is now showing the true reflection of the state of that particular zone. So despite the fact that they pumped in 1.3 trillion euros, and we all expected that this is going to help the Eurozone, but it had a very short-term effect on the Eurozone. So what is showing us basically is that the Eurozone is still in recession.
Even at that state, you do know, because when Michael was here, we talked about it. I think I also talked about it with you also. Given the bearish numbers, the bearish trend, in the Eurozone, the Euro has stayed, it's held its head above water.
We can't categorically say that.
If we're using the fundamental analysis.
If you use the fundamental analysis, at the currencies market, what we begin to do is we begin to compare the Euro with other currencies.
Not the Euro on its own. Not the Euro on its own.
Not Euro on its own. Now, if you look at what we have recently in the past 2 weeks, you see that even the guys from the stocks, from the equities, are not too happy with the performance of the Euro. One day is up 2 steps, and the other time is down.
Well, the volatility is to be expected. We're still having all kinds of happenings, all kinds of events in the Eurozone. But data is still being pumped out.
But what analysts or investors were looking at is that ECB is pumping in money, so there's going to be a miraculous recovery in euro, and before you know it, euro start jumping back like a country that was never sick. Euro is sick. It's still very much sick. It has to be taken easy.
Yeah, but for currencies traders such like yourself, I know you say apart from the fundamental analysis, coming to the technical analysis, as it were, whatever happens in that zone, even if we're having some major headwinds coming out, the euro, or maybe as a pair, euro USD
will still drop. It's going to provide gains for us in the currencies market, but for some people maybe in the stock market, for them it's not too favorable because the euro is dropping, so it's not a good place for them. So they have their investment there, and their investment is depleting.
So the meeting today, the ECB meeting today, all the analysts polled, they all say that they expect the Mario Draghi
to
leave the rates
interested, and there are even concerns that will they be able to sustain even at that 1%, because going by what's happening right now, some policymakers in Germany, who are the key movers of ECB, are saying that they want ECB to pull out from the crisis zone. That I think that the ECB has done quite a lot from the financing. He has pumped in a whole lot of money, and we are saying that Spain is on the verge of becoming like Greece.
So is that a major worry for?
It's a major worry.
Obviously for the markets, but for currencies.
For currencies trader, it's not
a worry.
It's not a worry. But I have probably stocks in the banking sector in Spain or.
And of course, we know the banks will be the first to take a major hit.
Before you know it, what you see from those people who have their shares in all of those banks is that there will be depletion. You understand? And a whole lot of investors have been crying already from what they have from Greece. So imagine, because the Eurozone is a 17-member nation country, I have investment in Greece, I have investment in Portugal, I have an investment in Spain, I have investment in Italy, and all of my investment is going down. It's not interesting at all. But for those who are in currencies market, it's another story entirely. But when you look at this zone at Eurozone as we speak, it's not too attractive.
Well, gloomy. Well, I'm sure it's not all gloomy. Let's take a short break. Now we'll come back and try and search for the light at the end of the tunnel, if there's any. I have been talking to Bade Ajidahun. He's a currencies analyst from Forex Time, and we have been looking at the impact of the latest March meeting minutes of the Federal Open Market Committee that has plunged, especially the equities market, into a sea of red. We'll be back after the break. Please join us again. Welcome back. It's a good day for the US dollar. Many investors fleeing into the greenback, which is traditionally known as a safe haven asset. So many investors were disappointed this morning when the U.S. Federal Reserve announced that it may not give more monetary stimulus or quantitative easing, QE as it's known, to support the U.S. economy. Well, Bade Ajidahun is still here, and that's what we're looking at. Now let's track the performance of the dollar. You have said before the break that you expect the dollar, as at now, right now as we speak, to be trending higher. Is it the U.S. dollar?
The U.S. dollar is paired against the
euro. Perhaps we could have that chart up now to see. Let's just track the movement of the U.S. dollar at this time. So what are we looking at here, Bade?
Okay, that's the currency of the euro dollar, and what you are seeing in late yesterday evening towards the early hours of this morning is the market trending down from that point, and that was majorly coming from the data we had from FOMC. And in the early hours of this morning, we are still seeing price dropping very much because the dollar is gaining strength, and on the other side, the eurozone are posting negative data. Yeah.
That little white red line dropping down. Is that? What currency is that?
That's the currency, euro versus dollar. Now this drop is showing us that the euro is weak and the dollar is strong. So what is showing us that the dollar has been making a whole lot of money from late last night into the early hours of this morning, and in around 1 or so, or 1:15, we should be getting data from the eurozone. So what traders at this point in time will be looking at is that by probably when the ECB is going to release their news, they want to watch out for the direction, that is the speech. What is it going to show? Is it going to show a positive mood, or is it going to show a negative mood? Now, so what currency traders will be looking at is that if they are getting something positive from the eurozone, what is going to mean is that the euro is going to retrace, that is going to have a positive boost. So today we are on the sidelines,
just waiting, but at the same time taking profit from the dollar.
Taking profit from our run from dollars from yesterday into the early hours of today. So around 1 or 2 this afternoon, when they are going to be releasing the ECB interest rate, the news that is going to be coming out from euro is going to show us two things: is it positive or is it negative? If it's a positive news, a whole lot of traders are going to be buying the euro because they believe that for a very short time we might likely see the euro rally up.
No, I'm thinking what else the ECB president, Mr. Mario Draghi, would tell the markets. Everybody, especially analysts, believe that the interest rates will be kept steady. I mean, they've pumped in so much money into to support. So what else is there for him to say? What exactly is the market waiting for for him to say that he hasn't said before?
They're going to have a pre-meeting before the news is
main meeting. Of course, there will be a press conference.
Going by anything that I've seen in this market, sometimes the mood of the market changed. Look at what Bernanke said and look at what happened. Understand? So we will not, because of that, jump the gun. All right, we'll wait for the outcome of their meeting and be sure that what they said they are going to say is what they're actually saying. So if we jump the gun and probably they held a meeting and from their meeting the tone of the market changed, investors are going to be reacting to that news at that very particular point in time. All right, so if it's good, because we've had the data, we've had information of what will likely come out, then that means it's going to be a bad stuff for euro, and it means that dollar is still going to continue gaining. But if it's going to be a good one for the euro, because if ECB increases interest rate, it's going to be good for the eurozone. And what you're going to see is that the market is going to trend up.
But that seems impossible at this point. It wouldn't be a wise economic decision to increase interest rates. I mean, the numbers speak for themselves.
So obviously, what I'm saying at this point in time is that traders are going to be staying at the sidelines.
You're also going to be staying by the sidelines.
Sure, I'm going to be staying at the sidelines to see what will happen.
So how long can the dollar sustain this rally? How long can it be sustained? Let's say the ECB, what we're expecting, the interest rates are kept steady, and perhaps there are no positive sentiments to help improve sentiments at the market. How far can the dollar rally go?
The dollar rally. Today is Wednesday. All right,
4th of April.
4th of April, and we are ending the week most likely tomorrow because most banks will be on holidays on Friday because of the Easter break. Now the dollar is going to fall towards a logical support. All right, but by the time we compare the long-term outlook of these two economies, the dollar is still stronger than the euro at this point in time, going by the economic data that is being released. So I see the dollar gaining strength almost towards the end of this week, depending on how fast the market moves towards the next support we are having on the euro.
And with so much confidence in the dollar and by extension the U.S. economy, it would seem like investors have forgotten that the U.S. still has a huge debt burden hanging over its head. About 14 trillion U.S. dollars. Nobody knows how sustain in terms of repayment to investors holding on to the U.S. Bonds and treasury bills, especially the 10-year bonds, which is the investors' favorite.
You just said 10-year, you just said long-term. We have different kind of traders, and I think we've explained that. Now, some traders are trading short-term. They are intraday traders. They are taking position within the day. An economist once said, he said, in the long run we are dead. That's Keynes. I said in the long run we are dead. So some speculators are daily speculators. Alright, so they want to take their position within the day or a couple of days. While some speculators are taking their decision for a long term. So while some people are thinking of taking a bearish trade on the dollar, a bearish trade on the Euro USD as a pair right now, some investors will not see it as a good decision. They want to take that decision on a long term basis, so they might likely not be doing anything. But for a short term trader, all right, whichever way the market is going to fluctuate, and they can take advantage of almost any swing in the market. But the long-term guys are looking for a long-term trend in the market,
and they are the ones who worry.
They are going to be worrying about the $15 trillion and all the debt and all of that. The short-term trader most likely is not putting all of this into consideration. He wants to know: is the dollar going to appreciate today? Is it going to depreciate today? Imagine you are telling a bureau de change or an aboki, a malam on the street that, see, do you know that dollar that the American economy is having 14 billion or whatever? He doesn't understand all that. He wants to exchange his currency and make profits within that short period of time. All right. So we have the short-term speculators and we have the long-term speculators. So what the short-term speculators will be doing are going to be favoring the dollar in the very short term. So that's what we are going to see the markets responding to.
Now, obviously, we're in the first quarter of the first quarter rather, second quarter for this year. In terms of how the first quarter ended for the currencies, what currencies pair would you say did perform the best, as it were, in the last quarter? Well, I imagine it must be the USD. Or should I say the euro?
I think it's subjective, because if I might like to take to trade the euro dollar, and probably another trader said I prefer the Australian dollar versus the United States dollars, or the Great Britain pounds or Japanese yen. For instance, look at for me, I think the euro has been interesting this week. This is for the first quarter, but I'm also going to tell you that the one I feel that it's has given us most gain will be the yen. Because in the currencies market, what we saw for about a month plus, in the early months of February, Japanese posted a trade deficit, and they devalued their currency, I think in February also. So we saw the Great Britain pounds appreciating against the Japanese yen. So for about a month and a half, we saw the Japanese yen. In fact, if we can get the chart of the GBJPY, I'll show you, it has been trending up. So most traders for a month or two have just been taking a buy position on the yen, and they have been profiting. So
despite the fact that the Japanese economy is still the high deflation, the tsunami earthquake of last year.
Yeah, it's a bad news for the Japanese yen. All right, but if I'm a citizen of Japan, all right, and I'm trading. So while I'm busy saying, oh, what is happening in Japanese, oh, this is rubbish, I'm also trading against the Japanese yen, because whichever way, it's a loss to the economy. But for me as a trader, it could be a gain to me, because the Great Britain pound has been appreciating against the Japanese yen, so I have been taking a buy position all the while, and that's profit for me. All right, so I think the Japanese yen, the euro yen, Japanese yen had made a swift movement to the upside in the first quarter of this year, and it has, for me, it even made some gain. But the euro dollar has been struggling, but it has also been a good currency to
watch. Bade, for the second quarter, I know in portfolio managers, we usually take stock of their portfolios, restructure, take different strategies for this this quarter. Do you have some personal strategies of your own that you have put into consideration? What are you going to be doing differently from the first quarter?
What I'm going to be doing differently is that in portfolio management, basically going by the currency that I've been analyzing, the euro dollar and the pound dollar, we've been seeing that there has been a whole lot of struggle between these two economies. So what I'm trying to do is I'm going to be shifting to an economy that has less
volatility,
less volatility, and less distressing news coming out from, just shift to an economy that has less volatility.
And what economy might that be? Because I didn't know that the developed economy, they all have their issues.
You have this Swedish krona, and we have you have the Swiss. Yes, you can begin to pair all of these currencies with some other currencies that people don't watch out too much for. So a larger percentage of the portfolio will shift from the Euro USD to some other currencies that don't have too much of volatility, and their trend are easily predictable. Because what you want to do is you want to be able to analyze the trend of the market and flow with it. So if you have a lot of whipsaw in the market, it makes your portfolio unbalanced. So in your portfolio, you want to keep your drawdown minimum, you want to keep your risk minimum. So what you are going to be doing, what I plan to do in the next quarter, is that I want to reduce taking positions on currencies that will expose me to more risk in the market, and go to less volatile currencies where I can make decent gains and with a very minimum risk in the market.
Bade, thank you so much for your contribution. We have to leave it there at this time. Thank you so much for being here. I have been talking to Bade Ajidahun. He's a currencies analyst at Forex Time, and we have been looking at the currencies market, the impact that the U.S. Federal Open Market Committee has been having on all classes of assets this morning, particularly on equities and currencies. We'll take another quick break now. When we come back, we'll take a look at our earnings board. The earnings parade continues at the Nigerian stock market, and yesterday Diamond Bank, one of Nigeria's commercial banks, did put out very robust 2012 first quarter earnings. A few weeks ago, the bank did come out with a profit warning, and its full year 2011 profits came in very bearish. But Diamond Bank seems to be soothing investors right now, coming out with very robust first quarter earnings. We'll be right back with more details. Welcome back. Let's go over now to our earnings board. Let's start off with Diamond Bank, which gave us a pleasant surprise yesterday when it posted its first quarter 2011 earnings. Very robust earnings. Let's go through the numbers now. Gross earnings, according to the bank, grew 51.7% to 30.7 billion naira. Profit before tax also came in significantly higher, over 312.9% at 7.4 billion naira, while profit after tax also surged up over 351% to 4.8 billion naira. Very robust earnings there from Diamond Bank. Now, still talking about Diamond Bank, the bank also announced on Tuesday, that was yesterday, that it is seeking shareholders' approval to hold merger talks with other banks in the country and to raise about $200 million in bonds. It plans to do this at its next annual general meeting, which will hold at the end of this month, on the 30th of April. Well, the bank did not disclose details on the timing for the debt issue, but it says it is targeting strategic investors, including the World Bank's private sector lender, that's the International Finance Corporation. We saw Diamond Bank also rallying yesterday, pulling one of the highest volume in terms of on the top trades chart, and also rose yesterday in terms of share value. good news there from Diamond Bank. Hopefully investors are happy about that. Let's go over to GT Assurance's full year 2011 earnings from the insurance subsector of the market. So turnover or gross premium came in higher for the year, up 33% at about 10 billion naira. Profit before tax also came in higher, up 23% at 1.2 billion naira, while profit before tax also went up significantly higher, up 44.7% at 931.5 million naira. Well, the company is also proposing a cash dividend of 8 kobo for investors. That's 8 kobo for every share GT Assurance share held for investors. Let's go over to Ashaka Cement from the one of the cement companies listed on the bourse. It's a full year ended earnings for 2011. Turnover came in marginally higher, up 8.5% at about 20.7 billion naira. Profit before tax also up by the same percentage, up 8.5% at 4.7 billion naira, while its profit after tax also went up 18.9% to 3.72 billion naira. The company is also proposing a cash dividend of 40 kobo. Payment date is yet to be given or announced by the company. Will be, of course, looking out for that and tracking that for you and give you details of that as soon as we get it. Age 11's full year 2011 earnings. The company reported a turnover up 35.5% at over 18 billion naira. Profit before tax also surged up 29.8% at a little over 1 billion naira. However, profit after tax, as the company's net profit, declined about 16.3% to around 542.8 million naira. However, the company is proposing a cash dividend of 14 kobo for every share held. Payment date is the 9th of July. That's this year. Better Glass, also on the earnings board, the company reported a turnover of 12.7 billion naira actually. Profit before tax, however, fell significantly, down close to 100% at just a little over 2 billion naira, while profit after tax, that's the net profit, came in at around 1.5 billion naira. Well, those are some of the earnings. Well, so many companies reported their earnings yesterday, but these are just a few that we can take at this time. But of course, we continue to track them for you. Over 20 companies now have reported their earnings for the full year of 2011. We're expecting so much more. We're still expecting some from the banks. About 6 of them or so have reported their earnings, and most of them are giving out cash dividends, and 1 or 2 of them are giving out bonus dividends to investors. Well, that's we'll leave the earnings board there for now. Now, the traffic is booming in the social networking sites across the globe. Now, these days, people, especially youths, prefer to broadcast links instead of just sending it one by one via email, which thankfully is still relevant these days. Now, although Facebook remains the most popular and widely used, Twitter is gaining some ground, especially here in Africa. Now, according to a recent survey by a Kenyan-based research group, Portland Communications and Twitminster, the Twitter traffic in Africa is on the rise, and some countries are taking the lead. Now, the company analyzed over 11.5 million geolocated tweets originating from the continent in the 4th quarter of 2011. Let's look at some of the findings of the company. Now, South Africa, according to the survey, is the continent's most active country by volume, pulling over 5 million tweets in the last quarter of 2011. Kenya comes in second with 2.4 million naira. That's from East Africa. Nigeria takes the first spot in West African region with 1.64 million tweets in the last quarter of 2011. Egypt is closely behind, 1.2 million tweets, and Morocco coming in 4th with 745,620 tweets in the last quarter of 2011. Well, according to the study, 57% of tweets from Africa are sent from mobile devices. 60% of Africa's most active tweets are aged between 20 and 29 years, while Twitter in Africa is widely used for social conversation, while 81% tweet to communicate with friends. Well, of course, there's no doubt that the use of this social networking sites, particularly Twitter and Facebook, is defining a social identity for many of Africa's young people. Now, we did talk to 1 or 2 people about how Twitter Twitter or social networking sites to define their lives. So let's listen to one or two of them, what they had to say.
Thank God for the BlackBerries. You have it with you all the time. Your Facebook account is there, your Twitter account is on, you can go online. And at home, most of us have internet capability at home now. And everything in the house is sort of connected to the internet. So, for one, every time I get home at night, one of the first things I do is open up my laptop in the house and put it on. And just put it on. For me, it's not a distracting thing. It keeps me constantly in touch with the people that I need to be in touch with. Of course, there are certain distractions. People sending you broadcasts they don't need to be sending you. People just deciding that they want to chat with you.
Through Twitter, you get to meet a lot of people and you get to network. And most times when you bump into them outside of Twitter, you, oh, hi, I follow you. Oh, I follow you too. And you begin to get to know each other better. My BlackBerry is more or less like my life. It's like a mobile office for me. I check it at night, first thing in the morning, last thing at night. I try to, keep up to date with news items by going through Twitter, then Facebook to catch up with friends. My BlackBerry was down for 2 days. I felt like a part of me had left.
Fascinating stuff there. All know they are defining the lives of Nigeria's youth. Well, that's about all we can take on today's edition of Business Morning. Thank you so much for being a part of it. Channel's news track is at the top of the hour. I'm Esther Obudaga. Bye for now.